really what is happening, what it is. So, guys, thank you very much. Yeah, let's go deep. Let's go deep. Let's go deep. I'm ready on my side, Mr. T.
Okay, let me just do this and then we're good to go. Just going to share my screen now. Okay, so I hope everyone can see my screen. We are going to present, yeah, right now. Okay, welcome again to another fundamental session, guys. My name is Dumishora Mudisa. This fundamental session is brought to you by Forex AMG, and we will be discussing the S&P 500, the S&P rather Global PMI. In particular, we'll be dealing with the services PMI and how that kind of gels into our narrative of our economic narrative and basically what we might want to see into the near future, right? So again, okay, so let's just continue. Now, we will be dealing with the economic calendar. We'll be looking at those two events that are events of concern, or rather events that we should note. We'll also be looking at global services PMI, capacity utilization. We'll be looking at capacity utilization as well, and um, cross-country interest rates, Dallas Fed Services Index, US PPI, right? So these indicators are particularly important to our broad understanding of the behavior of the market, right? Now, let's get into it. Now, as you can see, we are going to be dealing with UK's S&P Services PMI, which is the global services PMI. Not just that, also the US S&P Services PMI. Both of them are referring to the same thing. The only difference is here, this is being done by this is being done by different countries. So this is conducted by different countries. That is the only difference. And what we are seeing here is a previous month for UK S&P 500 Services PMI. They had a previous month of 52.0, which is basically above 50, which means it's an indication of good service, a good service sector, according to the Purchasing Managers Index, right? The forecast is 52.3, which is an increase from the previous month. That's what the economists are forecasting. The economists are forecasting improved conditions, improved economic conditions in the service sector, right? And once you look at the US S&P 500 services PMI, or rather, let's just remove the S&P 500. We just call it S&P Global Services PMI, which this news, by the way, it's coming out tomorrow. We are getting the numbers tomorrow. The previous number came out at 55.0. We do not have a forecast, rather, so they did not give us a forecast. And as such, due to the fact that they did not give us a forecast, we have not been provided with the forecast. That means we will just be looking at the previous month and make any assertions on the future based on based on what prior history is telling us, based on the historical data, right? Now, what you see here is ISM non-manufacturing employment, or rather ISM services employment. So in the month of October, we continued its upward trajectory. So as you can see, this year, non-manufacturing employment, the service industry has been suffering since the month of February. Remember, an index number below 50 is telling us of economic weakening conditions in the service sector. So anything above 50 is telling us that there is strength, there is inherent strength in the system. And what we've seen is after June, as we got into the month of July, we started to see some strength. We started to see dramatic strength in in the service sector according to the purchase managers index, right? And then we saw a bit of an after we saw this move back up to 50, above 50, we have never looked back. We had a bit of a correction in the month of July, August, and September. However, the market has recently bounced back with the October numbers, indicating to us that the service sector is as strong as ever. It has never been stronger in a whole year. So that would indicate some strength for the US dollar and would actually explain why the dollar index is at 106 instead of at 102, for instance. Right? This would perfectly explain this. Right? Now, what we should also note is the fact that this is just a base, right? It's not telling us anything about S&P, global S&P. Um, what the S&P is basically measuring for ISM service index, right? But what is important to note here is that this is for service employment. So because service employment has been up, right? Service employment has been up. That is a good sign. That is a fantastic sign for the US dollar. And we should be aware of that as well, right? That's a brilliant sign. Now, moving on, when you see services, this is basically global services, right? We can see Great Britain's service PMI, we can see JP Morgan service PMI, or rather, rather Japan's service PMI, rather my bad. We also see Euro area PMI. Right? In one chart, we want to compare what global PMI is doing, right? And what we can see here is that US service PMI, because of the baseline of this chart, is a bit flat, right? So, however, everything else is not as strong as you like it to be. It's not as strong as you think it should be, right? Look at Japanese PMI, service PMI. Service sector in Japan is weakening, as you can see in orange or rather in maroon. The chart is basically it's crashing. It's basically going down. It's even below 50 right now, which indicates weakness in Japan, weakness for the Japanese currency. So your long-term view of the Japanese currency should be a weakened Japanese yen, right? That should be your overall bias, just based on service PMI numbers, amongst other economic variables, which we won't get into today. But this is just a broad, generalized account of the Japanese yen. Now, when you look at GDP, Great Britain, right, you can see it's a bit flat. In the Euro area, EA, it's also a bit flat, just the same way. I think what's interesting is Great Britain's economy is so connected to the rest of Europe because we don't really consider the Great Britain to be a part of Europe because of Brexit, right? However, that is just politics. When you look at the real data, when you look at charts like this is very clear. It's telling us clearly that the UK economy is connected to the rest of Europe. The UK economy is connected to the rest of Europe. Otherwise, why are the PMI numbers for GB and EA moving in cognizant, right? Why are they moving in tandem? Now, that tells us there's weakening PMI globally. However, in the US, service employment is still looking good. So we have a bit of contrasting views, but we will develop our narrative as we move along this presentation, right? Okay, so now this is very interesting, capacity utilization. And this chart, I don't think you'll find this chart. Not a lot of people will show you this chart because it's a very systemically important chart, right? This is basically telling us like 70, this number that you see is a percentage. So every company, when you're manufacturing or every company just operating, an operating company has a specific it has capacity, right? It has capacity would refer to like how much resources relative in terms of human resources, how much equip how much infrastructure do they have to conduct a specific amount of business. So if the capacity utilization rate is going up, that means they're using more of their capacity. They're almost at full capacity. They're using more human labor. They're using more office space. They're using more resources. That is what capacity utilization implies. A higher capacity utilization would imply that a lot is happening in the specific company. The company is trying to push numbers. However, it is also a bad sign because even though they're trying to push numbers, that means you're left with less capacity. And it means your company is not as flexible as you would like to think it is. So, as a company, you like to have a low capacity utilization. You want to be happy with your profits while at the same time have a low capacity utilization. You don't want to utilize the maximum of your capacity. The more open capacity you have, the more flexibility your company has. That is just business management 101, right? And this implies that if this chart is going up, in this case, it's going down, it means that companies in the United States are pretty much doing well balance sheet wise because they have a lot of capacity. And it's not like we are seeing supply of goods and services being produced. We aren't seeing a significant decline, although we aren't seeing an increase either. However, because we aren't seeing a significant decline, this is a good sign for the United States dollar, amongst other things, right? So now, what is interesting about this chart here is, as you can see, this is a chart of interest rates, global interest rates, and we want to find out how interest rates kind of tie into this narrative, right? So you see GB in Great Britain, the Bank of England cut interest rates in purple. The purple line represents Great Britain's interest rate. The UK Bank of England cuts interest rates before the Fed. The Fed decides to cut interest rates a month later, right? And what do we see? Lo and behold, interest rates continue going down. The the Fed follows the Central Bank of England, right? The Bank of England. So right now it's safe to assume the global economy is in an interest rate cutting cycle, including South Africa. Just today, the news came in. They cut interest rates by 25 basis points, which is 0.25%. If we say 25 basis points, we're saying 0.25%. If we're saying 50 basis points, 0.50%. If we're saying 100 basis points, we're saying 1%. Just a disclaimer for those who are unaware. Now, what this is telling us is that the central banks clearly see smoke. They clearly see smoke in the economy. If they did not see any smoke, then interest rates would not be cut in the first place. Why would a central bank cut interest rates if they did not see smoke in the real economy? So this implies a lot of problems within the real economy. However, how is this going to impact the service industry? It will impact the service industry positively because it means they're trying to save something in the industry, but also that means service sector, they have access to cheaper credit, they have access to cheaper funds that they could use for research and development, that they could use to expand operations and therefore improve profitability, right? This is what they're trying to do. So low interest rates is a bad sign for the overall economy. However, it is a good sign for an industry that desperately needs credit. And the majority of industry, in fact, the service sector on its own, by definition, is a credit-based sector, right? It's a credit-based industry in the sense that we are not just including we're not just including normal services, we are also including financial services. Now, that gets very interesting because if services includes financial, since services include financial services, right? Service PMI includes financial services. This means that we have an opportunity. It means there is an opportunity. The market is seeing an opportunity to say, you know what? Services, we need credit. Credit is cheaper because the central bank is cutting interest rates. If credit is cheaper, we're going to expand our operations. We're going to expand our operations. That means our PMI index number to increase, right? And the economists are anticipating an increase anyways. The economists are anticipating an increase. On top of that, we have signs of a strong dollar, right? So this is all pointing in the direction for the United States. It's pointing in the direction of a strong a strong S&P global service PMI report, which will be out tomorrow afternoon. So this is what the market is telling us. This is what interest rates are telling us in a nutshell about service PMI. Now, now just looking at interest rates is not enough. We also have to look at something, a bit of an alternative source, which is Dallas Fed Services Index. This is the Fed's, the central bank, the Federal Reserve's this is the Federal Reserve's own data. In blue, we have the Federal Reserve's own data, one of the Fed's branches, Dallas Fed. So the Fed has a bunch of branches. For those who are unaware, there are about 6, 7 branches. So they are split into regions. So each bank is a regional central bank in a sense. But the central bank, there's only one central bank. These are just regional regional institutions of one thing, right? Now, what we are seeing here is that Dallas Fed Services Index telling us positive services. If you guys remember the first chart we illustrated, that was ISM service employment. Service employment looks exactly like this chart. It is going through the roof. The Dallas Fed Service Index is telling us that service sector in America is performing. It's actually outperforming the market, although the market has had a recent uprise. Though that recent uprise, we cannot shed conclusions on the recent market's increase because of the fact that it has only been recent, right? So because it's only been a recent increase, as a statistician, you have to consider how many times the range in which it has happened. In other words, the standard deviation, how many times has the market performed like this before we can honestly and safely conclude that this is the direction of the market. So that is what I mean by standard deviation. So we cannot make any assumptions based on recent market moves, which is why I give you guys an overall chart. I give you guys a whole 1 year chart. Sometimes, in some sessions, I'll put out a 10-year chart just to show you guys the extent of the points we are trying to make, right? In this case, what you see is we're comparing Dallas Fed with PPI, with the US PPI. But in this PPI, we excluded food, energy, and trade services so that we can practically target the areas that are dealing with services, not just services. It also includes goods, but it's more general, but not as general as the original PPI. This is just a filtered version of PPI because oil and the price of oil is going to impact the PPI whether we like it or not, but it's not going to give us a true reflection of producer prices, right? What's going to give us a true reflection of producer prices is when we factor in oil and we factor in food as well, because food is a very variable instrument. It's too variable. It changes. The standard deviation of these three components of the economy, food, energy, and trade services, is significantly higher than the standard deviation of, let's just say, your other goods and services, right? Your staple goods and services, your durable goods. So that's also something to be aware of when you are trying to analyze what a news event might or may not do, right? So when you see a chart like this telling us that services is looking good, PPI is looking good, this is all positive for the United States dollar. And in fact, when you go back to the other chart, we saw interest rates are down in the Great Britain, interest rates are down in the United States, which is a positive for the Great Britain pound and for the United States dollar. Now, when trading this news event tomorrow, I would highly suggest that we avoid G GBP USD. We avoid GBP USD because these two events they're not happening at the same time, but you're going to get the Great Britain S&P first, right? You're going to get the Great Britain S&P first. And then later on during the day, when it's New York session, we're going to get the US numbers. but the effects of GB service PMI is going to be long lasting. It's not just going to be a once-off thing, right? And it's going to create a lot of volatility in such a currency pair, right? That is dealing with both currencies that we are trying to analyze, so to speak. We're trying to analyze fundamentally, right? So I would say if you're trading the GBP, you'd rather trade GBP, JPY, or whichever, anything that is not related to the United States dollar, if when you're trading the GBP news. And also, also you have to, I would recommend trading a US dollar currency pair that has nothing to do with the pound to be on the safe side, to avoid any market, to avoid any weird market movements. So this leads us to the end of our session, guys. Any questions? I'll be taking questions for 10 to 15 minutes. Please, guys, ask your questions in the chat box and I'll answer them to the best of my abilities. Any questions, guys? Any questions? Okay, I see two questions in the chats. Um, okay. Which currencies are highly impacted by oil or US stocks as well as 10-year bond? Okay, so the 10-year impacts the currency of the 10-year. Whichever currency, there's 10-year yields of every country has 10-year yields. The United States has 10-year yields, South Africa has 10-year yields, bond yields. So it just depends on the currency that the country that you're dealing with. In terms of oil, it's mostly the United States dollar because oil is priced in US dollar, in US dollars. US stocks, it's US dollars. Again, it really depends on the stock, which stock you are trading. Are you trading American stocks? If you're trading American stocks, then the currency that's going to be impacted by an American stock is the United States dollar, amongst others. McDonald Wayne from FX Street also shares such style of analysis sentiments. Okay, that is very interesting. I appreciate that. I'll take that as a compliment. So both GBP and USD will be bullish at different times. Most likely, yes, which is why I say avoid that currency pair, GBP USD, for this one. But it would really be a testament of your trading prowess if you can effectively trade the both of them during this news event. Right. So that would be a testament to how good of a trader you are. So trade GBP USD at your own risk. Do you think it would be smart to trade NAS tomorrow? 100%, 100%, 100%. I just don't know to what extent this S&P Global PMI will have on an index like NASDAQ because this is just based, S&P is a company, right? And they're just releasing news about services. So yes, to some extent, the S&P 500 as an index would be impacted by this news, right? It would be impacted by this news because a lot of companies on the S&P 500 are service sector, are service industries, right? And it's just picking those S&P companies and looking at services within the companies that are listed in the S&P 500. Great illustration, and thank you. Do you do daily or weekly presentation? We do weekly presentations. We do weekly presentations, and we have many plans. For example, we have many plans. Please visit our website and also download our app. For example, please just visit our website. We have every information that you need. All the information that you need is on the website at forexamg.com. So do you think the market will be trading good as we approach the end of the year? Yeah, I do not think so. I don't think so. In December, the market is usually going through a lot in the month of December because of the fact that it's basically, especially towards the end of December, that's of the business end of the month, and also considering the fact that it is winter, and because it is winter, not a lot of businesses are booming. However, it would be interesting because tech industries might be booming in winter. This is winter in America, right? I'm not talking about Africa or Yeah, I'm talking about America specifically. It's going to be winter. Right now it is winter, and as such, the market does not usually perform well in winter. What's the correlation of service PMI and inflation? Very interesting. They have a positive correlation. They have a positive correlation, which means service PMI and inflation follow each other. To what extent is this correlation positive? A very minor extent, not to a large extent. And this is because of they are basically measuring two different things. When you're talking about service PMI, this is the service sector of the industry. The service sector of the industry might be doing good, whereas the goods sector of the industry might be performing poorly. And as such, the CPI might remain stagnant. So that means the correlation would not hold under those conditions. So we are currently waiting for buy stops to be triggered on GP. Any additional advice? I don't have any advice, my good sir, on that. What correlation of service P? Okay, I did explain that. Which currency pair or stocks does gold correlate with? Okay, that's very interesting. So gold correlates with the Canadian. Gold correlates with the Canadian dollar. Also, oil correlates with the Canadian dollar. Gold also correlates with countries that are heavy gold miners. Countries that are large gold miners, like the South African rand, is heavily correlated with gold to some extent, right? That's if depends how you're measuring the South African rand. If you're measuring it against a dollar, that's a different story. But if you're measuring it against, let's just say, a currency that isn't so sensitive to gold. In fact, a currency that would do the opposite of what gold would do, then yes, the rand would increase. So it really depends on the currency, the country that you're dealing with. Is this country a heavy gold miner? I hope that makes sense. Okay, so I see another thing. How can one trade fundamentals long term? Okay, what I would suggest is if you're going to trade fundamentals long term, it's more about swing trading, right? So you look at interest rates, you look at the implications of an interest rate decision over the long term, right? You look at the ones that have the most weight, right? You look at that, and then you'll be good. So I just have one more question. What's the current impact of on gold with the current war? Very, very interesting. Very, very interesting. I think that's the last question I'll take. So gold and war, it's a very interesting thing. Gold is a heavy, it's a hedge against it's a hedge against risk in general. It's a hedge against risk. So gold is basically if a war breaks out, right? What usually happens is a country needs to a country needs to hoard its wealth. It needs to hoard its physical wealth because its digital wealth can be under threat because of digital attacks. Warfare is not just in the physical, it's also in today's day and age, warfare is about digital capabilities and capacity. So once you take those things into account, you say, okay, this means we have an attack on our systems. Russia's system is under attack, for example. Ukraine hacked into Russia's system, and it means that the financial system is scrutinized. Now, when your financial system is scrutinized, the only the only alternative you have is hard wealth. Hard wealth, what do we mean by hard wealth that can be easily transferable globally? And that would either be cryptocurrencies or it would be a heavy metal like gold. So to some extent, gold is very bullish war. If you're bullish war, you're bullish gold. So even let's consider this. Since 2021, since 2022 rather, since the war in Ukraine, gold has absolutely skyrocketed more than most assets. Gold has skyrocketed more than most assets in that same period. In this 2 year period, in this 3 year period, gold has went up significantly more than most assets we can possibly conceive. And this is a function of war amongst other factors, right? A lot of countries are hoarding gold because anything could happen. anything could happen. Your real estate is gone. Russia bombed Ukraine's real estate. Real estate industry is gone. Stocks are dead, but gold is still alive because gold is an actual metal that is very hard to destroy, right? Also consider the fact that gold can be stored underground as well. Gold can be stored underground. So that adds a lot of personality, I would say. It adds a lot of personality to the heavy metal itself. So I hope that has answered your question. And thank you guys for tuning with us today. We really appreciate it. I'll just hand over to Mr. Ben for final words. But thank you guys so much. I appreciate you guys. I know you will do the best in trading. I don't think anyone can touch anyone here. When it comes to trading, you should have that kind of ego about yourself as a trader that no one trades better than you. So please, guys, carry that ego with you. A good kind of ego. I'm not talking about the bad ego. I'm talking about the good ego, the ego that promotes confidence. That's what you need as a trader. So thank you, guys.
Yeah, no, no, no. Well said, bro. It cannot be better than that, truly speaking. It is true, man. You must be confident in what you do. You must be confident in yourself. Like when you enter the market, truly speaking, you must be confident. You must tell yourself that I'm here to take, and the market can't do anything to me. And those are true words. So, guys, thank you very much for the session. It was quite impactful. I was taking notes throughout the session, wire. So, we know it very well. We shall meet again next week. We shall meet twice as per usual. We shall meet on Tuesday. We shall meet on Thursday. So, but for most of the people, we shall meet on Thursday. So, guys, with that being that, please, visit Forex AMG and you will find everything that you need. With that being that, guys, we've got a few great things on the lineup for you guys. So stay tuned for that. It's going to be epic. Guys, please enjoy your evening. Enjoy the day. With that being that, we can close with that. Shaya. Viva. Yeah. Power.